Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Good day, Sandra. Thanks for confirming the sound. Let me display the PowerPoint presentation. Asian session live market analysis on February 21st between 5 and 5:30 GMT. So we come across, because of the holiday mood, the market is having a very thin volume on the moves. So let us track the market using the live market quote page. I'll give the link for the live market quote page, and you can just save it in the favorite and use it to track the market. Let me focus the camera over that of the live market quote page. Now you can see the current market levels. Euro is trading around 1.367476. 1.3671 is the low, 1.3724 is the high. So they made a nominal upward gap opening, and from there they started sliding, and you come across 17 pips negative net change in the case of Euro. GBP is trading around 1.2628, 1.2632, 1.2630 is the low, 1.266260 is the high. 22 pips negative net change is seen. So a nominal USD gaining move is seen to start with, and earlier when they opened it, it was in positive net change. Gradually it came down to that of the negative net change, and in the case of USDN, 83.10, 83.13 are the current levels, and 83.04 is the low, 83.15 is the high. 1 pip positive net change is seen. So when Euro and GBP are showing double digit negative net change, Yen is showing only a 1 pip positive net change or a single digit positive net change. In the case of USDCH, 94.48, 94.51 are the current levels. 94.15 is the low, and they are closer to that of the high now, and 94.58 is the high. 3 pips positive net change is seen. When Euro is showing 17 pips negative net change, CHF is showing only 3 pips positive net change. So they are holding CHF and making the dip in the case of Euro and GBP. They are not correspondingly making the rise in the case of Euro USD CHF. As a result, you find Euro CHF is also in the negative net change of 12 pips, and the current level is 1.292427, and the low is 1.2924. They are holding it near that of the low. 1.2953 is the high, and they are expected to make a brief downward movement and then subsequently make the rise in the case of Euro CHF. Similarly, we come across the variations with regard to net change in the case of Euro and GBP. As a result, you find that Euro GBP is trading around 0.8424, 8427, 8423 is the low, and 8439 is the high, and you come across flat net change. That means around the close level on Friday, you come across Euro GBP is holding, and it is also expected to make the slide later on. Then in the case of USD CAD, you find an interesting aspect. USD CAD is showing negative net change. Australian dollar is showing negative net change. So that means they are handling the crosses. So that is why you find the denominator currencies are kept at a lower level. The numerator currencies have made about 10 to 20 pips dip from the Friday close. As a result, you find the respective crosses also making the dip. And here you find that Euro Yen and GBP Yen also in the negative net change because of the negative net change in the case of Euro, and GBP and Yen is just showing 1 pip positive net change. As a result, you find a cumulative effect of dip, a nominal dip in the case of Yen crosses. So these are all the week beginning false moves in the case of the majors and the crosses. So whatever the move you come across here, they are the initial moves for the week, and invariably they are false moves. So we will come across how exactly they are going to turn around the market from that of the European session. Then in the case of Canadian dollar, 98.63, 98.67 are the current levels. 98.50 is the low. 98.66 is the high. 2 pips negative net change is seen. and Australian dollar above that at the parity 1.0116, 1.0119 are the current levels, 1.0116 is the low, 1.0154 is the high. Because it is showing negative net change, we find that crosses are handled and the numerator currencies are showing negative net change. Only the two denominator currencies are showing positive net change. So Canadian dollar is showing negative net change because they are handling the crosses at the moment. So let us see what could be the possible moves for the week beginning. I'll focus the camera over that of the PowerPoint presentation. So during Japanese session, swings are expected. They are expected to make nominal swings and they are expected to make a drop during the early European session and a rise could be seen. Then again a dip and firming up moves could be seen during US session. And you know that it is a holiday in US. Obviously the volume will get reduced and in the absence of volume, the traders will also hesitate taking positions. So week beginning false move might be a nominal dip during that of the early European session and a small dip during that of the US session, and afterwards they are expected to firm up. So these are all the expected moves for today. And what could be the type of moves we could come across tomorrow and till Friday? So tomorrow, 22nd, they are expected to make an upward gap opening and make more gain and make a little bit of volatile moves during that of the US session. From Wednesday onwards, 23rd of February, we are expected to, and we could see further gains in the case of Euro and GBP and also the new denominator currencies. And Thursday, we will come across considerable gain. And Friday also for the weekend, we could come across a little bit of volatile moves during the European session. And then finally during US session, they are expected to make a real upward squeeze. So these are all the expected moves and they are expected to continue the upward move as a trend. And in between intraday, you will come across some little dip and drop and things like that. And they are all actually buy opportunities. So during the rise, it is not advisable to buy after the rise. So we have to wait for such drops, especially week beginning false move. And if you try to take a buy position, and once we are able to keep stop at entry, then we can wait for the weekend to close the position with a substantial profit. That could be the safe way of trading in the current market conditions. And with regard to the initial lows and the highs, in the case of all the majors and the commodity pairs, Euro low was 1.3683, the high was 1.3724. You find that the low has been breached around 3:35 GMT. Till now, it has not come above that of 1.3683. So that indicates that they wanted to make an intentional slide today. So probably one can do a small sell and buy trade or wait for the full drop and during the European session, then subsequently take a buy position once the low has not been breached for more than 30 minutes to 2 hours. Then in the case of GBP, 1.6232 was the low and they breached the low by 2 pips. So you could come across lesser drop in the case of GBP and more drop in the case of Euro to start with. And you know that in order to create the sentiment, they could make a little more drop in the case of GBP just to create the USD gaining sentiment and then subsequently reverse the market. So you will come across always Euro could initiate the drop and GBP could follow it with a lesser intensity. Immediately people will think that, okay, GBP we can buy, Euro looks very dangerous, and probably they can create stories pertaining to that. Then suddenly GBP could make a drop and create the surprise and hit the stops for the traders and then gain the levels. And so during the US session, they are expected to come closer to the high. Before that, they are expected to make further slides in the case of Euro and GBP as a week beginning false move. Then in the case of USD CHF, 94.15 was the low which is intact and 94.58 is the high. And currently they are holding it closer to the high but not breach the high. So what do you understand? They are trying to hold it while Euro and GBP are dropping so that the respective CHF crosses could show downward stoppage. And in the case of Yen, 8404 is the low, 83.04 is the low, 83.15 is the high. Both are not breached. You can understand how subdued the moves are in the case of Yen. So wait for the moves to initiate. Then later on you can try to take buy position or a sell position in the case of USD Yen. In Australian dollar, 1.0123 was the initial low. They breached the low and formed 1.0116 low, and they are holding it closer to that low, and they could break down further and probably go just closer to the parity and then come up. Then in the case of Australian high, 1.0154 is the high, which is intact, and you come across in all the numerator currencies, Euro, GBP and Australian dollar, negative net change is seen. They intend to make a drop because on Friday they made an upward squeeze, and predominant of the traders who have gone short would have just covered the shorts and turned long. So the players have to make weak beginning false move and just hit the stops of such higher level long holders, then afterwards try to rise it. So this is on a daily basis, on a weekly basis, you come across a scenario, and if you understand it well, you can simply laugh at that of the players, how they are systematically doing it. But still, in the market, we come across so much of uncertainty with regard to the type of moves they could make, and we continue to confuse ourselves using various type of other distractions. Then USD CAD 98.50 is the low, 98.64 was the high, and it reached the high, and now you come across that USD CAD has come to the positive net change. 98.71 has become the high, so which is again the USD gaining move. So they are from that of handling the crosses, they have come to that of the majors, and so they could make further slides in the case of majors from now towards close of the session. So you can read the market referring the current market levels to that of the initial lows and the highs. And normally they just make the initial move in the case of the commodity pair, and then subsequently you come across that is reflected in the case of the majors as well. So you now find that CAD has cut the high and sustained there above that of the initial high. So they wanted to drop Euro and GBP, and also they intend to make further drop based on the algorithm in the case of Euro and GBP and Australian dollar during the early European session. And whenever they make a drop during the early session, understand that they create that uncertainty, and then subsequently when the traders liquidated the buy positions at the lower level with a loss, then they try to gain the levels. So either way trap moves are part of the market game. So there is no point in becoming bullish and bearish, and try to look at that of the levels, how exactly they are rated to that of the initial lows and the highs, and then try to take trading decisions. If you are afraid of doing sell and buy trade, you wait calmly for the early European session, and then after the drop initiate the buy. Don't straight away buy when they breach the initial low and stay below that low for more than 30 minutes. Don't try to buy there. So that is my sincere advice. Wait for further drop and buy. So let me minimize the PowerPoint presentation and focus the camera over that of the live market code page and take up the questions which are asked here. Then Jack. Then what lows are you expecting during the early part of the European session for Euro USD? See, normally, now you come across Euro GBP. Euro USD is showing about 18 pips negative net change. They are staying below that of the initial low. So for 2 hours they could drop. So the next psychological level will be 1.3650. The other psychological level 1.3625. Then the next psychological level 1.36. So you have to find the intensity of the drop. So if the first drop is, say for example, about 15 pips, then they may drop about 45 pips. The first drop is 20 pips, then subsequent drop lead to 60 pips drop. I explained it in my trading system. So there is no question of asking me how much they will drop. The first drop is 50 pips, then second, third, all put together you'll come across 150 pips drop. So look for the first drop below this initial low, how much they drop, and then estimate how much they could drop further down. So they could try to go closer to that of 1.36 or 1.3635 or 25 and things like that before making further rise. Hope you are able to understand how we can estimate simply based on the first move, because the same quantum they try to use it subsequently. Then, what did you mean by the early part of the European session in terms of GMT time? This again you have to go through that of my trading system. I explained it there. The European session starts by 8 GMT. First 1 hour and 30 minutes is considered as the early session. The last 1.5 hours is the late session. In between you come across the mid session. So from 8 to 9:30 GMT will be the early session. So we use the timing and also the levels estimated in the market reading and try to use it for our trading purpose. So it is not simply the levels we look for and trying to estimate the support and resistance. We try to estimate the first drop or the first rise and multiply it by 3 because they do it 3 times. So when they drop first, they will drop 3 times. Then first drop, say for example 20 pips, then up to 60 pips drop, they will make it as a net change, and then you will find the low will be intact. And afterwards you confirm it that the last 30 minutes they don't breach the low. And if they don't breach the low in 30 minutes time, then in the next session we try to take a buy position so that easily we'll be able to keep stop at entry. Do you think any other technical analysis is needed to confirm it? We'll try it in a demo trading platform and see how exactly it works. If it is suitable, then you can use it. Then SG. Please can you give an idea of this quarter move for numerators? See, till end of March and first week of April, Euro and GBP are expected to gain the levels. So with regard to the larger time frame, this is what, so there in order to understand the long-term forecast, I am using the algorithm, and also for the intraday forecast, for the session-wise moves, I am using the algorithm. Besides, we need to use the market reading technique of how they are respecting the initial lows and the highs, and also the type of moves they make it in the market in order to understand what could be the potency. Based on that, we can estimate the potency. Suppose the volume is relatively less, then instead of gaining all the 350 pips level, in an appropriate way, probably they can gain about 200 pips on an average. Or if they, in case if the move is very good, like they are making on a daily basis 150 pips drop and rise, then the volume could be good. Then in that week they could gain about 350 pips, and in a month they can gain about 900 pips. That is how we will be able to estimate, what could be the highest point there. As a potency, it doesn't mean that they have to respect it. We try to estimate that as a potency, and we look for such moves. And in case if the move is not coming and if they slowly deteriorate because of the lack of volume and things like that, we modify and try to see how much they gained in a particular week. Say in a week they gained only about 70 pips. So in that particular month probably they can gain about 70 into 3. So this is how we can easily estimate what could be the possible highs and possible lows So based on such estimates, I am trying to give the forecast what you come across in FX trade. Then type, do you expect euro drop by 100-150 pips today for the week beginning? False move. The drop happened during the European or US session. I explained it in the forecast expectation. European session, there could be a quick drop, and during US session, there might be a dip and then rise. So probably it depends upon the first how much they are dropping from that of 36.71. Just see that, because now they are doing only a consolidation after forming 36.71. They are not breached the low for 30 minutes, and still they are not gone above 36.83. They are simply holding it. So because they are handling in the mid sessions the crosses. Afterwards you find now that CAD has become positive, showing positive net change, and Australian dollar is showing negative net change still. So they intend to drop it. It is confirmed. But still we will try to take a sell position around that of the initial low. Not just straight away in the market. Around that of the initial low we can try to take a sell position, and we have to quickly keep stop at entry and then try to see how much they are dropping it. And accordingly we can just trail the stop downward in a profit making position, and also keep a limit and try to book profit. So how to estimate the limit? We have to see how much they are dropping it. First to drop, say for example from 36.50, in 20 pips they are drop approximately. So 60 pips they could drop. So around 36.12 or 36.15, we keep a limit, we should be able to get it filled. So you can estimate it. Still we will not take a chance. We will try to use a trailing stop of 15 pips, so that either a minimal profit or a maximum profit will be able to get it in that particular trade. So unnecessarily we will not incur any loss. So we do the market trading, then take the trading decisions. However, the forecast says that euro and GBP are expected to rise, and that is a long term. And intraday we find there is an opportunity for it to drop before making a rise, and we can do a swing trade or simply wait for the drop to happen and try to take a buy position, rather than simply taking a buy position and telling that you only said that euro will go up whereas it has dropped, your forecast is wrong and things like that. I cannot help it. Then Yaz, for Australian dollar, are we expecting the visit parity or closer to parity? They could do it. Probably they can, earlier high initially, they raised it up to 1.0037, and then further they made a drop below that of parity and came up. So they could probably go closer to that and then rise. And Trevor, do you think euro will rise a bit in the rest of the Asian session before dipping? Yeah, there could be a possibility that they could go closer to that of the initial low, but after they are going to that of the initial low after 30 minutes. So that is actually a false move. So they will go closer to 36.82 or 36.81, and then they build all sell positions here. Then make a small gain so that you don't book profit in case we have got a buy position. You can only keep stop at entry, then subsequently make one big go. Understand, they are very, very smart in handling the traders, so we should not underestimate them. But they have only a simple mechanism of trying to go up to that of the initial low, initial high, because it is not done from one place. Okay, the market operation is done from different parts of the world. So obviously they need to have a better communication, thereby they will be able to act in a cohesive way. They handle it very nicely. For that they use these things as the reference levels. That is why we are also using it. Otherwise there is no logistics that by 3:30 you will find the initial lows and the highs, and absolutely no logistics unless and otherwise we understand this is the method they follow, so we will also follow the same. Then Carlo, can we expect euro and GBP breaking 1.3863 level. Yeah, there is great potential is there after the drop. It depends upon the intensity of the drop. We'll be able to estimate it. If they drop very quickly, and then the rise will be very big. If it is a sluggish drop, and the sluggish rise will be there. It is like a bouncing ball effect. And Raj, I have seen FX Trade winners, webinars, Sam, and find that his trade entry are very similar to us, except he uses chart and draws horizontal lines. Would you consider expressing the 30 minutes strategy in terms of above and below drop? Okay, now Raj is telling that why not you use the chart. Let me tell you honestly, sir. I'm not here for any prize and things like that. You know that I'm not expecting any reward from anybody. The only reward I probably expect is the traders say that, okay, we are able to earn money from that other market. Otherwise, normally we hear that 95% of the traders lose money in the market. Okay, so I'm doing it as a mission or with a concern or a cause that the small traders with a limited equity should be able to earn from the market doing wise and safe trades. Okay, now why I am not using the chart? Now I was using the chart, and invariably the chart was the causal factor for creating the fear. And see, I can simply say that control your emotions, control your emotions, control your emotions. But if I don't arrest the triggering factor, all my saying will go waste. So you have to understand that the trigger comes from that of the chart, because you see the moving averages or you see the chart with regard to various time frames. So what has happened on Friday, what has happened last week, last month, last year, and things like that, in order to draw the moving averages, invariably market will look bearish. If you try to draw a line from that of 1.60 in the case of Euro or in the case of GBP 2.11, market will look very, very bearish. So you will unnecessarily develop a mindset, either bearish or bullish, without reading what is the current condition. Whether the current condition gives me a buy and sell trade opportunity or a sell and buy trade opportunity. I can simply say that, okay, once zero comes to about 1.29, I will take a buy. Fine, you can derive it out of the chart, but your mind is not going to keep you calm. Your mind will say, come on, do it some trade, come on, do some trade, because we all become addicted to trading invariably. So how to control it? So you try to aim for a swing trade, then once a position makes profit, you try to keep stop at entry. As a simple technique, either you can do a buy and sell trade or a sell and buy trade on a daily basis. See, we can estimate the supply and demand, fine, and it is for currency conversion trade. Can we use that for a daily swing trade? Just do a sell and buy trade during Japanese session and a buy and sell trade during European session. If you don't do the trade, you immediately think that, no, I earned only $50 today. If I continue to earn for 20 days only $50, I will not be able to sustain myself. So immediately, what do you think? Okay, let me take about 10 lot position and earn $50 or earn 50 pips on each. So invariably, it triggers you to increase your quantum of take in the market. That leads to over trading. So if you want your mind to be controlled, simply telling that control your emotions is very easy, but put it into practice is extremely difficult. And any trader, let me tell you, even if the account is wiped out, you'll be simply watching the market without knowing why he is watching the market. That is the practical situation. Because even if he has wiped out or closed the accounts of 2-3 times, still he will watch the market and try to see, let me do it in a demo trading platform and see whether I am able to improve. So it is an inner urge. And because of the inner urge, without our knowledge, we become addicted to trading. So without doing any other work in the morning, as soon as you get up, you just open the chart or you open that live market quote page and continue to watch it. And you would not have done any trade, or if some people, they will be simply doing it in a demo trading account, or some people, they may not have an account, still they will be watching it. So this is a scenario you come across practically among the traders. So only solution for it is, if I simply say wait till end of this month and try to take a position, nobody is going to listen to me. There are every analyst telling that you stop to trade while trading. How many of you sincerely you stop while trading? You tell me. Because analyst can say so many things, but practically a trader has got his own mind and his own decision making. And if it goes wrong, he has got a tendency to blame others. If it goes right, then he will say he is the greatest person on the earth. So this is a normal scenario. And anybody who has blown that account will not just say that I have blown that account, whereas if he has made about 50 pips profit in one single trade, he will be talking about it for several hours. So this is not new with regard to forex market. This is there in every market. Even you call and find out from the local stock market or in a commodity market or an online trading, everywhere you come across the mindset of the traders are being exploited by that of the players. So unless and otherwise you change your mindset, I can say simply change your mindset, but you won't be knowing how to change it. For that, what you do is, do it in a systematic way, and in order to just quench the thirst of trading, you just do small trades and try to see that every trade you keep that stop at entry so that you don't lose money. And at least do 2 to 3 trades so that you get that mental satisfaction, and also it gives the confidence for you to stay in the market. And that is why I say that do only mini lots and just take a small risk of $30 at a given time and try to keep stop at entry, so even that does not become their loss, and then try to earn out of the market. So we need to find a practical solution. Okay, it is something like a person who has become addicted to alcohol and things like that. The doctor does not say that stop drinking. You know that the doctor says that gradually reduce it or try to go in for an alternative, and they try to give certain other type of medicines, exercise and things like that. So it is something like that, become addicted to trading. And a person who has lost money initially in the market will not get rid of the market. He will somehow think that I should earn back the lost money and come into the market again and again. So you tell me what could be the appropriate solution for such a scenario. So in order to control the market fear, I stopped using the chart. I am asking people to look into that of the live market quote page and see the levels and also see the net change. So you come across, see, we have watched the market nearly about 5 hours or from the start of the Japanese session. Hardly it has made about 13 pips. And between the high and the low, it has made about 50 to 52 pips. So this is how the swings are happening in the market. Nowhere you come across a big swing happened. So if you know the forecast, then probably when they are above that 1.37, you could have taken a sell position and just taken the profit. If you are not aware of the forecast, doesn't matter. You can just do the market trading and get convinced that, okay, this is the level. So now they have come to 1.3683, the initial low. You just see how they are respecting it. Then you will be able to understand how easy for you to follow this rather than using the chart and the candlestick and 15 minutes candlesticks and things like that. The fine-tuned level, you will not be able to get it. It is my understanding, because even though I am a statistics professor, I find that there is limitations with regard to using the statistics and also the charts. And Jack, could you repeat how you work out a drop for euro? They cut the initial low 1.3683 and came down to 1.3671. In 30 minutes, they are not gone above that high. And after about 1 hour, because around 3:35 they came down, and after about nearly 2 hours they are coming closer to that of the initial low. 1.368483 was the low, they have come to 84. Just see whether they are going and or staying above there for 30 minutes. We'll be able to understand. Then Dilip, what is your general outlook for gold? Gold, it is expected to make a higher level swings here, 1395 to 1385, and silver from 8230 to 8330, that sort of swings. You mentioned that they hold GBP when dropping euro and then follow with a drop GBP. How much drop are you expecting in GBP? In order to create the bearish field, after making a small drop, in order to create the bearish field, they have to make a little more drop in the case of GBP so that the traders will sell euro after the drop. Then it is easy for them to rise it in order to do the upward squeeze on such short sellers. So now the high was 1.326260 in the case of GBP and the low was 1.6232. They breached the low and just staying there. And in the case of euro, they have come above that of the initial low, but not in the case of GBP. Now they are just trying to do it. 62.30, 62.32 was the initial low. So what they will do, they will make the drop in the case of euro. And see, now you find that GBP is showing more net change when compared to that of euro. Because of that, euro GBP has gained. So where exactly euro GBP? 84.31, 84.39 is the high. So they may come closer to the high, make a brief upward stop before coming downward. Till such time, they have to hold euro and make a little bit dip in the case of GBP so that euro GBP can go up. Then make the upward stop and afterwards drop euro GBP. Then euro is also expected to drop, and then GBP will firm up and then subsequently drop. And finally, coming to that of the majors, they will drop GBP quickly about 10-20 pips. So probably they may come to about 61.50 or 61.30 and things like that, and then make further drop of 20-30 pips and then go up. So this is how they do it. So the first drop, if it is about 20 pips, then understand every drop will be for 20 pips. So 20 pips below the low, you can keep a buy order, or 19 pips below or 18 pips below, you can keep a buy order so that you'll get a definite fill. Because sometimes at the fine-tuned level, the platform may not fill your order. That also you have to keep it in mind. Then you say about silver. I said that silver is expected to trade around 32.30 to 33.30 level. Then bond. When the low is breached, how many minutes for this to become the new low? 30 minutes. So they become the new low, 36.71, and then they come up to that of the initial high. They have come above that of the initial low, initial low 1.3683. See whether they are able to sustain. They came around 5.35. So see whether they are able to stay above this for more than 30 minutes. So up to 6 GMT. Then you will be able to understand how we can take a sell and buy or a buy and sell trade there. And if they come closer to that of the high and not breach the high for 30 minutes, you can take the sell there. Or below that initial low, you can take a sell. So when you sell near that of the high, then it is a normal swing trade. When you sell near that of the low, it is a technical swing trade. Technically, you try to sell below that of the initial low and try to book nominal profit. And people call it as a breakout trade. And if you do not want to take such risky trades, then wait for the drop. Because we identify the drop is going to happen. The long-term trend is upward. So let them do all the drop during European session. And then afterwards try to take a buy position. That will be the wisest way of doing safe trades. Then Stephen, maybe 30-minute strategy is after the Nasdaq open, wait for 30 minutes in market. Okay, you can use any other thing because it is fine-tuning the study. That's all. Jack, you mentioned if 15 pips are lost in first 30 minutes, then the next 30, a total of 60 pips will be dropped. So when 15 pips is there, then they will drop only 45 pips, not 60. That means 15 into 3, 45 pips will be dropped. And then the next 30 minutes, if no further drop in next 30 minutes, so a buy euro could be when it gets 36.15, it is understood. Yes, when it drops about 45 pips and not cut the low for more than 30 minutes, at that time you can try to take a buy. So you can estimate what could be the buy level, and either you can keep a limit order or wait for the market to come. Probably there might be a small noise of 1 or 2 pips drop below that. You can fine tune and buy it. Or when the market comes closer to that low, just keep 1 or 2 pips below the low. You try to keep a buy order. Sometimes the market is weak, they will be able to easily fill it. Because when they make stop ends, we enter. Then Carlo, can we expect Euro and GBP breaching 1.38 in this? I think, Carlo, I explained it. Yeah, they are expected to go above from that of Wednesday onwards. Tomorrow they will make a little bit wide range swings, and Wednesday onwards we will come across quick rise happening in the market, and that is going to be the last week. This is going to be the last week of this particular month. So gradually they will gain the momentum in the market. Alright, so this for the benefit of others. I am fine with present setup and I use both the methods. Gives me good intraday trade. Thanks for the explanation. Somewhere one has to open the platform that other place trades. Without, I cannot place the trade. Okay, probably it is something like, you are trying to drive a tricycle or a bicycle. So initially if you are accustomed to that of the third wheel, then probably you will develop some sort of hesitation to fold the third wheel and try to drive with the second two wheels. And once you gain confidence and a balance, automatically you don't bother about the third wheel. So gradually you can do that, no harm. Because see, balancing the body is a physical exercise, so we are able to learn it fast. But trading is a mental exercise. It takes a longer time for you to fine tune it. And only if you make consistently profit-making trades, your mind is able to accept the concepts. Till such time, the mind, even though you learn it several days, you may not be able to imbibe it. No, that is a limitation with regard to learning process. That is why you find the schoolings and the college studies are having a longer period, even though it starts from that of the younger age. Still, you find it is a continuous process of learning from that of the world happenings. So learning is a difficult task rather than doing a physical task. Jack. So for Euro, 36.30 could be the low reached. Yeah, most likely they could make such drops. Okay, no more questions here. Then let me go back to that of the PowerPoint presentation. So today during Japanese session, swings are expected, and because of the holiday in US, the market volume could be gradually related or relatively reduced. So accordingly, they could make moves in the market. So don't expect any big drop or a big rise today. And small swing either way they could make. And after the Japanese session swing, they are expected to make drop during that of the early European session, and then rise, probably come back to the current levels. And US session, they could make a dip and firm up and just hover around in the middle level or slightly near that of the high. Then it is a weak beginning false move is expected during that of the early European session. Then afterwards, the market is expected to gain more levels from tomorrow slowly, and from Wednesday, Thursday, they are expected to gain the levels substantially. With regard to the initial lows and the highs, we breached the initial low and came down and went up to that of initial high, and they showed just 36.88, and come below 36.83. See, you are able to understand how easy it is to follow them. They are not able to sustain there. So they just came up for the traders to find that, okay, it has just gone above that of the threshold level, so why not we buy? So they are inducing the traders to buy there using those who use the chart and other analysis, then afterwards making that drop. That is why you find that you do all statistical analysis, calculate the pivot points and try to take positions, you find that your stop is hit. So we have to find a method thereby our stop is not hit so easily. There comes the importance of our analysis. Then in the case of GBP, 60 to 30 is the low, and they just breached nominally and still they are not come above 60 to 32. So they intend to drop. And in the case of CHF, they are not breached the low or the high. See, when Euro has made the drop, they could easily rise the CHF, but they have not done it. But in the case of Euro CHF, they are holding at a lower level. There comes the buy opportunity. So that is how we should be able to identify which currency to be participated at a given time. Then Australian dollar, they breached the low and still they have not come above that of the initial low 1.0123. So it gives a sell and buy trade opportunity. Then Canadian dollar, they breached the high 98.64, 98.71. They have formed the high and their holding is still 98.67, 71. You can do a breakout trade of buy above that of the initial high and just book profit during a quick rise. So you can identify trades based on these levels and identify what is their intentions, and as a guiding factor you can use the forecast also. So you can find that it is invariably narrowing your analysis and also reducing the uncertainty. That is what we can do with the forecast. We can reduce that uncertainty so that you have to find a certainty to a certain extent and try to conclude a trade or take a trading decision and try to enter into the market. See how quickly they dipped Euro. So I take this opportunity, thank FX Street for giving me that opportunity to give that Asian session live market analysis, and you people who have come here to listen to my talk, you have benefited. I am very happy about it. Try to learn it properly. Instead of simply following the forecast, you learn the market reading and also learn the trading strategies which I explained in my trading system. On a daily basis, I cannot do that. But to a certain extent, during Asian session live market analysis, I am trying to give what sort of trade you can do, like a technical trade or a swing trade and things like that. You try to follow it and you have to equip yourself with the knowledge so that it becomes a child's play for you doing trading in the market and earning from that of the market. That is what I anticipate from that of the small traders. Thank you one and all. See you again tomorrow. Bye.